Hey everyone, welcome back to Corporate Decoder, the place where we unearth the hidden truths in those hefty financial reports. And let's just say Visium Technologies seems to have been busy juggling a lot of numbers and some pretty interesting future plans. So, what is the big story here? Visium Technologies Incorporated, or Visum as you might see it on the stock market, dropped their quarterly report and it's packed with details about their pivot to becoming a pure play agentic AI company. Think of it as going from selling just a cybersecurity tool to selling a smart AI that can actually think and act on its own to protect things. This is a big deal because they're aiming for the massive agentic AI market, which is projected to hit a staggering $1.3 trillion by 2030. That is a lot of zeros. Let's dive straight into the numbers because that is where the real story unfolds. Looking at their balance sheet, which is like a snapshot of what the company owns and owes, we see cash standing at around $23,000 at the end of December 2025. Now, that might sound small, but it is down from about $60,000 just 6 months prior. What is more interesting is the liability side. We're talking about over $6 million in current liabilities. That includes things like accounts payable, accrued compensation, and importantly, notes payable and convertible notes payable. This means they owe a lot of money that is due relatively soon. Now let's talk about how much money they are actually making, or in this case, losing. For the 6 months ending the 31st of December 2025, they reported a net loss of almost $951,000. That's a pretty significant chunk of change given their cash on hand. This follows a net loss of about $55,000 for the same period back in 2024. It's clear they are investing heavily in this AI transformation, and that costs money. The liabilities are a really key part of understanding their situation. At over $6.4 million, their total current liabilities are a significant hurdle. They owe a lot of money that needs to be paid back soon. Digging a bit deeper, they have convertible notes payable. These are like loans that can eventually be turned into stock. At the end of December 2025, they had about $179,000 in these notes. What's concerning is that at the 31st of December 2025, a number of these convertible notes had matured and were in default. And not just in default, but with some pretty harsh penalties. Imagine a loan that, if you miss a payment, can suddenly become 1.5 times or even double what you originally owed, plus daily penalties. That is a serious financial risk. A big chunk of their expenses, especially recently, comes from stock-based compensation. They issued a lot of shares to directors, officers, employees, and consultants. For example, in the 6 months ending the 31st of December 2025, they issued a massive 49 million shares to directors and officers alone, valued at over $245,000. It is a way to incentivize people, but it also dilutes the value of existing shares for other investors and impacts the bottom line. This leads us to how many shares are actually out there. At the 31st of December 2025, they had over 453 million shares outstanding. That is a significant increase from the 368 million shares outstanding just 6 months prior. This increase is driven by all those shares issued for compensation and conversions. They also have common stock warrants, which are like options to buy shares at a certain price. Some of these have powerful anti-dilution features. This means if they issue new shares at a lower price than the warrant's original price, the warrant price automatically drops to that new lower price. This can significantly change the value and obligations related to these warrants. In fact, the exercise price on over 5 million warrants was reduced to a tiny fraction of a cent, $0.0042 per S-hair. Now here is an interesting one. In the 6 months ending the 31st of December 2024, they reported a gain on extinguishment of debt of over $725,000. This came from getting rid of old debts that were past their statute of limitations, meaning the company legally did not have to pay them anymore. So, while they are losing money operationally, they found a way to eliminate some old debts, which boosted their results for that period. Their operating expenses, specifically selling, general, and administrative costs, have increased from about $280,000 to $421,000 in the 3-month period ending the 31st of December 2025, compared to the prior year. The main driver here seems to be that stock-based compensation we talked about, which jumped significantly. They mention that they expect these expenses to decrease over the rest of the fiscal year. This brings us to a really important point for any company, the going concern. This is essentially a statement about whether the company will be able to stay in business for at least the next year. And here, Visium Technologies is pretty direct. They say their net loss, their negative working capital, and the cash used in operations raise substantial doubt about their ability to continue as a going concern. They depend on getting more financing, and there is no guarantee that will happen. This is a critical warning sign for investors. Looking at their overall status, they are classified as a non-accelerated filer and a smaller reporting company. This means they have some regulatory flexibility, but are also a smaller operation. They have also not elected to use extended transition periods for new accounting standards, which can sometimes be used by smaller companies to delay compliance. Digging into their business strategy, their transformation to agentic AI is clear. They highlight their True Context platform, which aims to be a groundbreaking cybersecurity and intelligence tool. They even mention their origins from a March 2019 software license with the MITRE Corporation. They are emphasizing that their AI avoids the common hallucination problem and offers transparency. They've also launched True Insight for video intelligence and TrueTrack for IoT. Their strategic contracts are a big part of their story, especially in emerging markets. They have a contract valued at over $20 million for national data center cybersecurity in West Africa, part of a US import bank initiative. They are also involved in an AI-powered public safety project in Peru, and are looking at national infrastructure projects in the Democratic Republic of Congo. These are substantial contracts that, if successful, could be game changers. The report also covers events that happened after the 31st of December 2025. For instance, in January 2026, they entered into several securities purchase agreements, issuing secured promissory notes and a considerable amount of common stock as part of these financings. These are essentially new deals to bring in more cash, often with investors who are willing to take on more risk for potentially higher returns. Two of these involve notes with original issue discounts, meaning they received less cash than the face value of the note. So, what is our take on all of this? Visium Technologies is clearly in a high-stakes transformation. Their move into agentic AI is strategically sound, targeting a massive future market. The contracts in West Africa and Peru are compelling and could be the bedrock of future revenue if they pan out. However, the financial picture is concerning: significant net losses, a substantial working capital deficit, and the fact that many convertible notes have matured and are in default, with harsh penalties, paint a picture of a company under considerable financial pressure. The heavy reliance on stock-based compensation, while a common incentive, also means that existing shareholders are seeing their ownership get diluted. The going concern warning is the most significant red flag, indicating that their survival depends on their ability to secure more funding. They are essentially betting big on their AI technology and these big international contracts to turn things around. It's a high reward, high risk situation right now. They have a potentially game-changing technology and are pursuing ambitious growth, but the financial tightrope they are walking is undeniable. Alright, that is our breakdown of Visium Technologies' latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.